Hello, this is Siwing Yi. Welcome back once again. And today I'm going to use the Redfin Data Center uh, housing update for October 2022. And the two markets I'm going to go over is Tampa, Florida, and Miami, Florida. All right, so without further ado, let me share my screen and get it started. Let's first begin with Redfin. By the way, Tampa. By the way, but in this meeting, I would like you to, if you see value on this presentation, on this video, please hit smash the like button and also subscribe to my channel. And also provide your email into my website so you could receive free email newsletters on a weekly basis on real estate investment opportunities. All right, so anyway, so let's get it started. And using these Redfin data, I've been doing housing updates in many markets throughout the country. If you've been following my YouTube channel, I've done Las Vegas and Phoenix and California and many other places. All right, so many more to come. And each of these markets, we will try to follow up with some additional housing updates, perhaps every month or every 2 months, depending on what relevant information is going on, what important information that needs to share. So, okay, anyway, without further ado, I'm going to go with the new listings in Tampa, Florida. By the way, the perception about Tampa, Florida is such that during the pandemic, of course, the housing prices have risen dramatically, skyrocketing home price increases, and then now, when the dust is settled, some uh, some people say that the Tampa market is overheated or overvalued, whatever that's supposed to mean. But all I can do is use as much uh, scientific data as possible to refute this alleged conclusions that are drawn by many people, by some people. And like I said, all I can do is come up with metrics and data and as scientifically as possible to you know to share with everyone what's the real things that's going on there in each market, in particular Tampa. All right, new listings. All right, new listings. The peak of the new listings was in July, where we've seen almost 2,000 new listings that came on the market. However, ever since July, the new listings have been decreasing quite dramatically to a point whereby right now, October 16, 2022, the new listings has decreased to 1,136 transactions, and which is 28% decrease year over year from last year, 2021. By the way, the black line denotes 2021 data, and the orange line up here denotes 2021 housing data year, and then the red color right here is 2020 at the beginning of the pandemic, and then the blue line is 2019. Right, so the new listing trends indicate that less and less sellers are putting their house in the market, given the conditions that we have seen in the past 5 months, namely, interest rate has skyrocketed 100% from the earlier part of this year, so that has changed everything. So, and the trend will continue, especially with the interest rate at 7% right now. I believe for the remaining 2 months of this year, 2022, and throughout the 2023, if the interest rate remain around 6 to 7% or higher range, the mortgage rate, we expect the sellers are not going to put their home in the market because most sellers are locked in on their mortgage at a very low rate, 4% or lower. and they have very little incentive to sell their home with a with a high buy another home with a higher price and and with a 7% interest rate, that we're gonna have to double the mortgage payment, which is not a good thing. All right, so the new listings are looking downward trend. By the way, another takeaway right off the bat I have for you, not only in Tampa market, because we're seeing sales decreasing, we're seeing new listings decreasing, we're seeing active listings decreasing. So we're having lower and lower supply of inventory. So we potentially will become historic. So we'll talk more about that throughout this video. All right, so the second thing we could talk about is active listings. The active listings, we start out the year with at this level, then it's going higher and higher throughout the past from May all the way until August, and then it plateau from August until now, because again, the buyers are not pursuing transactions because of the affordability factor, so they are staying put as well. So active listings are not doing well either. So let's look at pending sales. Pending sales has dramatically reduced, obviously, and to a point where right now there were only 737 pending sales transactions, and which is almost 50% less pending sales than 2021, which is up here. So pending sales in 2021 is 50% higher at that time last year at 3 to 4% mortgage rate, interest rate. We're seeing multiple offers and bidding wars in the Tampa market. But now, since interest rate is 7%, see, it's all about interest rates. But at 7%, even with a lower inventory, lower sales transaction, we're seeing very few buyers and very few sellers. So what does that mean? Well, it's pretty obvious. It means if the interest rate goes lower at some point down in the future, we will see some very interesting market dynamics, if you know what I mean. So economics 101. All right, so price drops, just like any other market, sellers always going to over list their price based on demand, and then finally they have to reduce their price. But in this case, it's very strange here in Tampa. And the percent of active listings with price drops has steadily gone up. Then in the end of July, it start going down. So I believe the sellers are realizing that the demand has the pushback, so they are lowering the list price consistent with the demand in the market. So it has been lower since July all the way down, now even lower now. So they're getting the message down to 10% on a weekly basis, so equal to around 40% of listings have to drop their prices. So this percent of backward listings with price drops is becoming a reality with the sellers in Tampa. All right, so then let's go over the very, very important metric right now, median sales price. And let me show you the big picture. You see what's going on. By the way, we've been working this market. Our investors, our out-of-state investors from many markets that we are helping, especially in California. We're still buying investment properties in this market. We know what areas to target. So back in 2019, before the pandemic, the median price of a home in Tampa Metro is only $234,000. So at that time, as I recall, some of our investors, they bought a rental property. It rents for around $1,600. So the number makes sense. They put 25% down payment. and they have a cash flow of a couple of $100 at that time. So that's a very good purchase, knowing that we did not know the pandemic is about to happen in 2020. So at 234 million price is a very good price, is very low price compared to other areas of the country. And so for those that people that purchase at the beginning of the pandemic, they are really have done well. So 234K, then 2020, it has increased 8% appreciation to 252. Then from 2020 to 2021, it has skyrocketed. The prices skyrocketed to 23%, which is amazing. 309K. Then from 2021 to 2022, year over year, June, another 27% appreciation, whereby the peak price back in a few months ago in June is 393K. So 393K. Now look at this. Now, ever since the interest rate hike occurred back in a few months ago, it did not affect the Tampa market. It is not. I mean, the drop in prices is only from the peak of June 26 at 393 until now, October 16, is 376. It's only like 4% drop in value in the past 5 months, even though the interest rate has skyrocketed from 3% whatever to 7% right now, 100% increase. I can tell you why, because even at 376K, relatively speaking, Tampa market is very strong. The demand of homes by primary home buyers and investors alike has been very strong. Tampa market have been, in the past few years particularly, has been one of the top fastest growing real estate markets in the country. Because when you have a starting point of 234K 3 years ago, that's a very low price point. So with that said, even at 376K, obviously for single family home investors, it's very hard to cash flow given at 7% or higher interest rate. So many of our investors are buying in the suburbs, like 1 hour to the north of Tampa or to the east and to the south into the suburb where the median price is probably around 300,000. You can collect rent for 2,200, even at a 7.5 interest rate loan for investors. You can still cash flow. So that's what's happening. So it's a very strong market. As a result, the alleged demise of this Tampa market has been greatly exaggerated by many news media. Of course, most of the news media organizations, they have no clue what they're talking about. Anyway, that's my strong opinion. So yeah, so take a look. I mean, this is very, very clear. I mean, there's not even clearly there's no crash in this market. This is not trending toward in any way, shape, or form. Furthermore, there's not even any kind of correction. This is like a stable, regular market. So again, job growth, population growth. Many real estate investors are entering this market to buy rental homes. Many primary home buyers are moving into Florida, and Tampa is still fairly low affordability, especially for out-of-state people migrating into Tampa area to live long term. All right, so does that make sense? All right, so a couple of more metrics, then we should be done with Tampa. That we're going to segue over to Miami, Florida. And average sale to list ratio. So is around 2%. That means our buyers are able to consummate a transaction at 2% less than the asking price. Whereas before the interest rate hike, typically a buyer had to pay on an average of 2% higher than the asking price by the seller. So at that time, in the first few months of 2022, we're seeing multiple offers and bidding wars in this market. Now has becoming a little better balanced market. But and the final metric is month of supply. As you know, 5 to 6 months is a balanced market. And anything less than 5 to 6 months is still a seller's market. So let's look at the month of supply. This is very critical. Right here, October 16 month of supply is 13.4 weeks. So divided the 4 weeks divided by 13.4. We have a little bit more than 3 months, like 3.3 months supply of inventory. So what does mean? It means this is still a very strong seller's market. There are still much more demand than there are supply of inventory. So it will make this market very, very favorable, very low risk housing market, Tampa. Contrary to what the public perception you may have heard or seen or study about. So all I can say, based on my 30 years of investing experience, I'm telling you like it is, the real truth, not all those overhyped YouTube videos out there and news media that are reporting very inaccurate housing information. So that's anyway. At the beginning, toward around April of this year, the supply of inventory is only 4 weeks. I mean, we're talking historic low inventory at the beginning of this year in Tampa market, similar to 2021. However, the inventory has increased just a little bit over the past few months because the demand has subsided primarily due to the higher interest rate. So, yep. So just to summarize the Tampa market is still very strong. There are no crash whatsoever. Clearly, that's very obvious. Bubble, no bubble correction, a slight few percentage point decrease, which is surprising to a lot of you. Some of you can't believe it. This is the true information. Many of you were thinking, oh, Tampa is one of the trophy markets, similar to Boise, Idaho, similar to Las Vegas, similar to Phoenix, that has the housing prices have skyrocketed so much that it's due to come down, right? Because it's overheated or overvalued, whatever. Well, not according to Redfin, not according to the data I just show you. So, so please drop a comment to see what you think. So the data does not lie. So people don't use emotions to draw your conclusions. You have to look at the data, the true factual information that I'm sharing with you. So Tampa was do very well. Investors of all types are flocking into this market because the numbers make sense. The returns on investment very, very high for investors that put in 30% down payment, 50% down payment, paying all cash, or using their self-directed IRA to purchase. Many of our investors are doing that. And of course, the Wall Street hedge funds, they are pouncing on this market because the yield makes sense to them. So you will see the single-family home investment market here in Tampa is very, very attractive, very desirable. The yield is very high, even though all the negativity are being out there, recession, inflation, crash, all those negative information that are being thrown out there. So every market is different. Real estate is local. There's no such thing as a national real estate market. All right. So that's my takeaway. Tampa is continuing to be a very strong market for home buyers and investors alike, and it has many metrics, many reasons to continue to for people to pounce in this market because the numbers make sense. All right. So, and then finally, let's talk about Miami, Florida. So here's the problem with Miami, Florida. Over the years, virtually none of our investors have entered this market. Sorry, let me share the screen again. Over the years, very few of our, I'm sorry. All right, let's get back. All right. Anyway, so let's talk about Miami, Florida, and okay, I want to make sure this is being recorded. Let's talk about Miami, Florida. New listings. Yeah, Miami. I never take our mom and pop investors into the Miami market over years because the Miami prices are very high from the get-go, even 10 years ago, even 20 years ago. So Miami is a playground for the rich and famous, with professional athletes, entertainers, and very and people with uh, high financial means. They and overseas buyers, right? Buyers from South America, Brazil. They love to buy houses here in the Miami market over the years, and people from over the world really. So the Miami, Florida market is a very high end market. Housing is very expensive. You have condos, you know, along the Miami Beach area and Fort Lauderdale to the north, selling for $1 to $10 million, $20 million condos. So it's just very high end, lucrative, exclusive markets for people that have lots of money. All right, so it will continue to do well. I mean, if you look at the East Coast, Atlantic Coast area, absent New York City and Boston in the Northeast, in the eastern region, eastern half of the U.S., you have to say that Miami East has the most expensive housing market on the eastern seaboard. So, and will continue to do so. We have a lot of money coming into Miami for many years, and it'll continue. So new listings has decreased a little bit, not as drastic as the other markets. Um, at only like 708 new listings just came on board in this past month, and still 24% lower than 2021. All right, and then let's go over the active listings. Yeah, very interesting. Active listings are pretty stable, pretty level throughout the year. And however, at the active listings is still 14% less active listings than 2021. Once again, Miami is a very unique market. It does not depend on that much on domestic buyers. You have a lot of foreigners coming over to live here full time, and investors buying very deep pocket investors. That is not the mom and pop types, hedge funds, Wall Street. They're coming to buy the single family homes in bulk in the Miami area, and also foreign, like I said, foreign investors are pouncing on this market, and they pay all cash. I mean, these people have some serious money. So it's a very diverse marketplace. It's very different. It's not the same as any other markets in the U.S. All right, so let's go over pending sales. Pending sales has been decreasing like many other markets because of a lack of inventory and too much demand. So, and of course, some buyers, some potential primary home owners that want to buy a home to live here in the Miami market, they are unable to do so due to the higher interest rate. So that portion of the market has dried up. So that's why the pending sales has been decreasing. The people that are buying, like I said, mostly are deep pocket primary home buyers, deep pocket real estate investors, hedge funds, and so forth and so on. All right, so we expect the pending sale to be continue to decrease as long as the interest rate remain at an elevated level. All right, let's look at price drops. Price drops, percent of active listings with price drops is at 4%. 4% per week, multiplied by 4 weeks, we're talking 16% price drop, not drastic. So it appears that the sellers or understand the, the decreasing demand in this market, so they are pricing their homes pretty realistically relative to the what the market is telling them. All right. So let's look at median price, which is this is a very important metric, median sales price. Let's look at 2019, the median home price of a house in Miami, around 318,000. Then 2020, pandemic occurred, there was 6% appreciation. Then the price increased to 337. Then from 2021 to 2020 to 2021, it was about whopping 22% appreciation increase in Miami. And then from 2021 all the way from 2022, June, year over year, it has another 18% appreciation increase, which is insane. So the new median price June of 2022 is 489. So we're talking 18% plus 23%, almost like 40% plus 4%, is almost 50% appreciation in the past 2.5 to 3 years in the Miami housing market, is because of low supply and high demand. Economics 101. Now, one thing, even though the interest rate has spiked massively in the past 4 or 5 months, as you can see, the median sales price pretty much stays the same with a slight decrease from June all the way to September. It has a slight decrease. Then from September to October, it went back up again to 481. So 489 to 481. So I'm not going to do any kind of calculation. All I can say is prices have not dropped, right? You could make the argument there are really there is no correction if you think about it. No bubble, no correction, no crash, nothing, because everybody want to move to Miami, especially the multimillionaires, millionaires, people from Northeast, people from New York City, people from New Jersey, people from California, wealthy people, financial services company, Wall Street are relocating some of their offices into Miami. So Miami is really is a Wall Street 2.0 if you think about it. So anyway, so final metric is a month of supply, and which is, wow, weeks of supply is, this is really weird. Weeks of supply is 24. So four weeks equal 1 month, 4 divided into 24. We talk about 6 months. Are you telling me this is a balanced market? Are you telling me this is a healthy market whereby there are equal amount of buyers and equal amount of sellers? This is very, very strange to be honest with you. I mean, I find this fascinating. I'm going to do more research about it. But nevertheless, the prices are maintaining itself because fairly low inventory and still very, very high demand from very upscale buyers in the Miami market. So Miami market is not for the small mom and pop real estate investors, particularly one that I work with. They only have limited amount of money to buy few rental properties at a very lower cost, but not Miami. I mean, just even the median price of 487,000 is kind of a low in my estimate, because the reality is Miami homes are very, very expensive. $1 million, $800,000 for 1,200 square foot, whatever. But Miami always going to do well, regardless of the hurricane, regardless of the weather conditions. People will flock into Florida. Florida is the #1 population growth market in the country for a good reason. It's paradise in warm weather. Homes are still fairly affordable compared to California and New York City and a few other high-cost markets. So anyway, so my takeaway about Tampa is still very affordable. Still a playground for investors and primary homeowners to continue, because it has a very good lifestyle, good weather, and no state income tax. And so Tampa will continue to do very, very well. I mean, you can continue to see a migration and the influx of people moving into Tampa area to the Gulf Coast area. And Miami, similar. Miami is an international market, right? As I told you, many wealthy buyers from all over the world, South America, UK, Australia, Europe, people and people from the up north, in the Northeast, New York City, New Jersey, Connecticut, they are migrating into Miami, Florida for the lifestyle, for the glitter, for paradise, whatever. Okay, so that's pretty much I have for Tampa and Miami. Hopefully you see a lot of value from this presentation. If you have, please smash the like button and also subscribe to my YouTube channel, and also subscribe to my website email to become one of our a free member of our real estate investing community, so you can receive free weekly newsletter into your email inbox to go over many exciting real estate investment opportunities for turnkey cash flow investors. All right, so thank you so much for watching. I will see you on the next video. This is Steven. You have a nice day. Bye-bye.